Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss viewer questions. Or listener questions, I guess.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello? 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight. The pennies we need are everywhere around us. Pennies.
Going in Raw.
Featuring Dan, Deity Dips, and Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today we're not sure because Hugh is in Greece right now. So we are recording this on September 10th on a Saturday morning. About an hour before Bama battles against Texas in college football.
What do you think? Bama or Texas?
So they will absolutely have an answer to this by the time they hear it. This could be like a totally unimportant thing by them. Obviously, I think it's going to be like Bama, probably like 42, Texas 12.
What's the spread?
Like,
oh my God. The spread is
Bama's
20.
I mean, yeah. Like, see, and I put him fucking 34 points.
Honestly, I might take that. I might take the spread on Bama.
I mean, it isn't Austin. So, I mean, I've got a couple friends going, but it'll be interesting. Obviously, you can talk shit if we're right. If we're really far off, Vinny, just edit it. You know, y'all just edit it and make it sound like we said the right one. But yeah, like I said, Hugh's in Greece when you're listening to this, but we did ask for a bunch of listener questions. And it is team at Pennies Going in Raw. If you'd like to ever submit a question, you want to kick it off?
Yes, sir.
All right. So first one's going to be from Jimmy Bear. And Jimmy says, Hugh and Dan, love listening to your podcast on my commute to work. Question I have is, how do you pick your SPY option strategies? Do you pick in the money, out the money? And how do you determine which date to expiration you want to roll with? Thanks. We've got a lot of questions about in the money, out the money, et cetera, et cetera. And so maybe we can kind of get them all done in this one. And if not, you know, we'll definitely read them all over and we'll figure it out. So that is definitely, and I just read over a few of these, so I know this one's good too. And I'll just, I'll read it as well. Hi guys, please touch on expiration dates and contracts you play. So many 0 days till expiration people out there. I can't take size and catch a big move unless I'm at least a week out. Thank you for what you put out there. I personally live by Hugh's quote. You have to walk before you learn how to crawl. And this is Chris. So yeah, so both these are about expirations and picking how long until your options expire. I know we've been talking about them. I know I'm more of a short term, you're more of a long term. And I guess just deciding on how to pick it, how do you go about it?
Yeah, so I keep it really simple. I like to go, let's just say that my target is $2 out of the money. Then that's typically the strike that I'm taking. As far as expiration goes, I'm going at least a week out, if not more. And I think that's something where I'm going for a week out. and most of the time it's 2 or 3 weeks out. And that's the way that I'm able to, size. I'm able to have the most confidence, and yeah, that's what I found worked for me. So like I said, is that, I'm typically taking the strike closest to my target, typically under. So if my target is 390, I'm going to take a 391 strike or a 390 strike, something like that. And like I said, I'm typically going 2 weeks out.
I think it also depends on like what you're playing. Like if you're playing an oversold earnings report or an exaggerated drop or something like that, and you just want to, I think that's more the time where you want to do it maybe 2 days out for that little 10% bounce back,
Definitely.
So I think, what you're doing and how you're playing it is a big determining factor. What do you kind of think about, when you're seeing all these like options gurus and stuff, they're always taking these 0 days till expiration. Is that just because like they're just playing what's going on right then? Or is it you don't want, like, they're just day trading it? Why do you think they're not really calling these options as swings?
Like who? Like the listener?
No. So you're looking at like all these options gurus and stuff. They're never really calling options swings. Is it just because they don't want to really be responsible for holding like their people's hand for like the 2 weeks and having to keep asking about it? Because it always seems like they're always 0 days out.
Well, there's two things here. The first thing is that when you're playing closer to expiration, you can blame it on more things. So let's just say that I'm playing 3 days out and it goes, let's just say it pops 20% in, 3 minutes. Well, now I could be like, oh, they went 20%. Like, congratulations. You know what I mean? If the play goes sour, at least they hit 20%. Where like for me, when I'm playing 2 weeks out, if I pop 20% for a 0 day and mine will only pop 2%. So it's not like I could be like, well, there you go, fellas. There's your 2%. So
it's more of just safety of whoever they're playing it with.
Exactly. And then the second thing, and then of course, the second part to that is that, you can basically blame it on theta decay. Like, dang guys, like I know this play would have worked. We just ran out of time. Like, that's just the nature of the beast. You know what I'm saying?
Yeah.
So they don't have to blame it on the play going sour. They'd be like, bros, like theta decay, the worst.
All right. So anything else you like to add for days expiration and like what you're doing for them? Because I know you like to play SPY a lot too. And that one is a super volatile one.
It can be really, really intriguing to go for 0 days. And I get it. What's not intriguing about it? You can make quick, large amounts of money. However, remember that 90% of options expire worthless. So please
scale out.
Yeah, like just give yourself time. Okay? Don't gamble. All right? Trading is hard. Just give yourself time on the options. That's all.
When do you think is a good time to do the 0, like lower time frame? If you were going to do it, what is the perfect setup for Hugh Henney to have to go for a shorter time frame on your expirations?
So literally just a pure lotto. So I'm looking for something to basically, like let's just say that SPY is down 2.5% and it's 1:30 in the afternoon Eastern time and there's 2 hours left. Well, that's the type of situation where I'm like, okay, are they really going to let this thing end down 3% without bouncing it at all? So, and that's the type of situation where, if SPY bounces at 1%, those things would go 2,000%. That's the type of situation where, I'll take like, a few $100, see if I can turn it into, like $100,000,
Damn, a few $100 to $100,000, dude. What is this? Buying Apple in fucking 2006?
Yeah, basically.
Back to it.
That's basically what I'm looking for. Like literally a pure gamble.
All right, so you seem a little tired right now. So what I was gonna do is give you one because I know you like this will get you going, get you a little riled up. This is from Mike. He asked, there's a ton of people making money shorting the market. Doesn't that make you more so think it's going to flip and pump into midterms? Thanks to Hugh for the levels on Twitter. I'm up 40% this month.
Hey, yo, Dear God,
Good
I wish
job,
I
Mike.
was at 40%.
No, that'd be fucking sick, right?
Yeah, 40% would be fantastic. First off, Mike, congratulations. Great job. I'm super proud of you. And so I don't really play that game about the psychology factor, because here's the thing is that, and I get it. Okay. Like I shouldn't say that I don't play that game. I should say that I only play that game in the most extreme times, because think about this. What about the past 2 years when everyone was like, oh, like everyone's super bullish, like everybody's throwing money at the market, it's gotta tank at some point. Well, if you had waited for it to quote tank, you would have missed out on 100% gains on the indexes. That's never happened before.
Yeah, no, it goes back to what we just said. I know our episodes are all out of sync, but we just recorded yesterday how the saying, you lose more money waiting for the lows than just playing it until it happens, you know?
Exactly. So although I do enjoy, or I do keep social sentiment inside the back of my head, at the end of it all, that's only a small piece of it. Because at the end of the day, if there's money to be made, I want to be there. So you'll hear me, and you know, I mean, you listen to my, or not that you listen to my levels, but you know, you look at my tweets and you look at my levels, and so you'll see when I say, hey, listen, I don't want to short the honey hole. I don't want to short the honey hole, you know, or hey, I don't want to go long here. I don't want to go long here. And those are times when, you know, it is part of social sentiment, but also when we're overextended. But still, even though I say those things, if the setup's there, I'll take it. So I guess my point being is that I think that just because everyone's on the same side means that it can, in fact, still work. But it is something good to keep inside the back of your mind. I totally agree. Yeah. I mean, midterms will be, I mean, they definitely try and pump the market into midterms. But, you know, a lot of it's going to come down to what that CPI reading is. And by this time that you guys are listening to it, you know, the CPI reading will be out. And like I said, on September 9th weekend, so I guess like that'll be like September 11th, that episode, you know, that, like I said, is I think that we pumped to 419 to 425, maybe even 430. And then if we get back underneath 400, I think we see 350, you know, and this sounds kind of weird, but like, I honestly think that it'll be a cold winter for stocks.
What brokerage does Hugh use after leaving TD Ameritrade?
This is an excellent question. And I don't technically know if I'm allowed to talk about this yet. However, I teamed up with a brokerage and we basically developed a new broker. And very soon we'll be releasing it to the public. Some things about it are, it's a direct access broker. So this means that, like right now, you know how order flow is sold to Citadel and some of the other banks? This is not. So that means that so right now when order flow is sold, they can basically see your playbook. The brokerage that I have teamed up with, we are making this broker and they're not selling any order flow to anybody. It's going to be a brokerage for serious traders. And yeah, I'm really excited about it. It's you know, these guys have been inside the broker game for decades and, you know, they came to me. And at first I was like, and then, you know, they let me help develop it. And now I'm extremely excited for it. So I don't even know if I'm technically allowed to say that yet, but pretty soon I will be releasing information on that. And I love it. You know, it, like I said, is that They get really good short locates. They're a direct access broker. So yeah, I'm excited.
All right, next one we've got. Hey guys, and this is from Riley. Hey guys, my question is Hugh going to return to the bio sector anytime soon? It seems there are some great deals out there right now and would love to know your thoughts on the sector in general. Thanks. Fibonacci going. I guess that one's for you, dude.
Yeah, so I definitely see a lot of upside inside the bio sector. But for now, I don't think it's really a sector that I want to sink my teeth into. And that's just because cash isn't cheap right now. You know, like again, like I've never really traded through an environment where cash was not cheap. And right now it's not the cheapest. And so for that reason, you know, a lot of bios, actually like literally 95% of them, take tons and tons and tons of cash. And so pretty soon you're going to see some of these start to file for bankruptcy. And when they file for bankruptcy, you know, again, it's because they can't get cash because they don't make enough on their net income, you know, et cetera, et cetera. And over the next 6 months, I think you're going to see a lot of bankruptcies. Well, I'll go like 6 to 12 months because, you know, this is like a lagging indicator. And like I said, is that my reasoning behind that is because these companies that have been able to just borrow more and more and more cash will not have that luxury anymore. So I think that there's going to be a lot of bankruptcies. And then once there's a lot of bankruptcies, that's when I'd like to dip my toes into it, because you're going to see the ones who stick out like sore thumbs and who have that cash flow and who don't, you know, who aren't filing for bankruptcy, you know, they're going to be the diamonds that just stick out for the future. And so that's what I'm looking for.
All right. Well, the next one is from German. I don't know if German is just how they're describing themselves or if that's their first name, but they want to know, do you usually trade the bell or do you wait for trends? Like where VIX moves or a certain time? How do you go about that? I think trading the bell is definitely one of the more stressful fucking things. It used to be one of the more exciting things where you're just waiting for it. And as you progress as a trader, you kind of get scared of it. And then you get back to being comfortable with it and being like, oh, this is the time.
Yeah. Yeah, I definitely don't trade the bell that often. I'm not, you know,
if I'm feeling frisky.
Yeah, I mean, I will trade the bell, but it's not like, you know, again, I think for me, the one thing that I used to do is like, I only trade from 9:30 to 11, and then I only trade from 2:30 to 3:30. Now it's like, listen, if the setup's there, I'm going to take it. No matter what time it is, no matter what, you know, I mean, you know, if the Fed's talking, you know, that'll throw me off a little bit. But, you know, if the setup is there, I'm going to take it no matter the time and extenuating circumstances.
All right. So do you check on the VIX and stuff like that when you're going for it or no?
No, I mean,
Okay.
Listen, like I'll have alerts set for VIX. Like, you know, let's just say if the VIX like spikes, you know, I'll have like an alert set, but overall, nah.
Okay. All right. So this one's from Robert. He said, hi guys, thanks so much for your help and advice each week. I've never missed an episode. Thanks a lot, man. That's dope as fuck. My favorite part is when Hugh swears and then apologizes to his mom. I look up to
Roberto.
You. What did I say?
Robert?
Yeah, dude, I'm a full American, dude. My bad. Okay, Roberto, all right, my fault. I look up to you both, having achieved what you have, and just have a really quick question. As someone trying to create good habits while using a small account, I'm buying a low number of shares, and it's really making it difficult to practice scaling in and out. I was wondering if you had any advice. Thanks again so much. I listen from the UK each week, so your advice is spreading far and wide. Kind regards, Roberto. Well, that's awesome, Roberto. Hope everything is good in UK. Or in the UK. So yeah, buying with a low amount of shares and practicing scaling out. I think it's as simple as percentages. Scaling out can be, hey, I'm scaling out 10%, 20%, whether or not you're scaling out a majority of your position. If you have 10 shares or 20, and that makes it, you're having to get out 2 of your shares or 1 of your shares. I mean, you're getting the the practice in regardless. I mean, the small account, and you're getting that, hey, I'm scaling out. This one worked. I cut this one too soon. I held on to this 10% too long. And I think whether it's small or big, it doesn't matter as much as it may seem.
Yeah. Yeah. I mean, listen, I think for your small account, it doesn't need to be so much of like a 3-part scale out or like a 5-part scale out. For me, sometimes, like I said, is that I like to be really systematic. However, there's some days where I'm just like I feel like every trade is working well. And so that almost makes me nervous to the point to where like let's just say that 4th trade that's really going well, I'll start to scale out just randomly. So let's just say I have let's just say you have like 6 contracts. I'll just scale like 2 here, 1 there, another 1 here. And so I don't really think for you, it really, for anybody, it really matters so incredibly I want to scale out right here. For me, pick your target. When you get 50% way of that target, cut half of your shares. No matter how many you're holding, no matter what you're trading, cut half. And then if you get to 75%, cut a few more. Even if it's like you have like 10 shares, cut 5. And then when you get 75%, cut 2. It doesn't have to be super systematic. It can be like
being able to feel it out is a good thing too. Like if something just pops up 10% and it's with the market and everything, hey, maybe cutting 60% is not the best. No one has ever lost money selling for profit. It's one of my favorite quotes in trading.
Yeah, so pretty much just feel it out and do it that way, and like I said, is that, you don't necessarily need to feel the difference between like drastic money. Just really get practice seeing the percentage gain, and like, again, is that, if you can take, 10 shares, that's great. If not, then 5 is fine. And then just continue to build it up and build your account. And again, once you get comfortable with 10 shares and your account's like, let's just say up 50%, go for 15 shares, stuff like that. And that's just like a really easy way. And like I said, is that when you hit 50% of your target, cut 50%. And then when you hit 75%, cut 20% more. And then when you hit your full target, cut everything except like maybe 10%.
Yeah, and whenever my account was small and I was practicing scaling in and out, what I would do is I would do just like how we were explaining. And hey, it's up. This looks like a good time to sell 50%. Hey, this one's down. I'm going to toss that money in here. And I would literally just keep rotating it and rotating it and rotating it. And I would always, you'd find some comfort. Yeah, not all of them are going to work, of course, but you're going to provide yourself with such a safety net. It'll really make you feel comfortable, and I think that's the best way to kind of get into scaling. I mean, definitely. when I started, I remember the days before, like after the market closed, and I was obsessed, dude. I would be trading until 7 p.m. right, and then right 7 p.m. hit. I'm doing all my good till close plus expirations. Orders, and I'd have an order log full of all things just ready to scale itself out. Like I was like, okay, tomorrow's done. Yeah, I've already got everything set. And so, I mean, it really does have to be systematic, but I mean, like, fuck, you can make it as systematic as you want. Yeah, no, I totally agree. I totally am with you. All right, and again, Roberto, thanks for listening, and we really appreciate you. This is Jack Black. What time frame do you use to set your daily levels at? Regards, Omar. So first off, thanks for listening, Omar. So I like the 5-minute and 15-minute chart personally. I also like the hourly and the 4-hour, but for my day trading, I typically use the 5-minute and I'll typically use the 15-minute. And those are just the 2 time frames that I found success with. I pretty much use them interchangeably. However, I definitely use the 5-minute more. All right, dude. This next question is going to get you bricked up. It's from our boy Tanner. I was wondering if either of you have formed a business entity for tax purposes. I've read a few articles on the benefits of forming an LLC for traders, but I was wondering if either of you had advice. I plan on forming one sooner than later as the tax benefits seem very worthwhile. Well, Tanner, I'll tell you something that Hugh doesn't even know. I've been using the Pennies Going in Raw LLC to write off everything. No, I'm just playing. But yeah, of course. Yeah.
So,
yes.
First off, thank you for listening. So first off is that as you're listening to this podcast, Dan is correct. We do have a Pennies Going in Raw LLC. And obviously Daniel and I, we are the owners of that beautiful business. And, do you need an LLC? No. Does it help? Yes. Especially if, and so I guess it depends. For instance, I use my LLC for a multitude of things. I use it for sponsorships. I use it to own part of the podcast. I use it for, when I sell merch. I use it for when I do speaking engagements. And then, of course, I have a brokerage account attached to it. So it's not just for trading. If I were you, I think that it's great to trade with an LLC. But if you can, add something else in there, because the thing is that it's good for trading with an LLC, but at the end of the day, how much can you really write off extra between the LLC and your personal? Not much, honestly. But if you're let's just say a real estate investor and you use that inside the LLC in conjunction with trading in it, that's gonna help you a lot. But for just trading inside an LLC, it helps. It definitely does. However, it's not gonna be an end all be all. This will save you tons of money. Where if you're a real estate investor, the difference between using an LLC and not is massive.
All right, and that is it for today's questions. And I guess before we kind of leave this episode, we also wanted to give a quick shout out to our editor, Vinny. He's taking pictures of the president at the 9/11 memorial. Obviously, I've already listened to this, but super dope that his two jobs are the White House, working for the Secretary of Defense, and Pennies Going in Raw, two very equal entities. You put us up against one another. I think it'd be a fair fight. I think Pennies Going in Raw may have the distance, maybe go the length. Depends on who's, in administration, of course. And so Pennies Going in Raw forever. And we'll see you all next time. We hope you have a good whatever week or day this is when we drop it.
Yeah.
Love you. Bye.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.